Hi, everybody. It's Stacy from Saltivation, and I have a special guest with us today. You're not just getting the usual crew of us here at Tax Ops. I have Tim Noonan with me today, who's a partner at Hodgson Russ in New York. And he and I actually have had the opportunity to speak together recently for a private equity stakeholder group. And so we thought we'd invite Tim here to kind of talk about the things that he sees in his practice and kind of how some of these items or issues from a state perspective bubble up, not just for businesses, but also for the individuals that might own those businesses. But before we launch into that, I'm going to go ahead and let Tim introduce himself so that everybody knows who he is.
All right. Well, thanks, Stacy. Glad to be a part of this today. So yeah, I'm a tax lawyer. I'm not an accountant, so don't hold that against me. And practice is all state and local taxes. And it's all, of all shapes and sizes, represent a lot of high net worth individuals, a lot of businesses on income tax, corporate tax, sales tax, all sorts of issues, mostly in sort of the Northeast. But in the residency area, sort of the personal individual tax, that's been an area that our firm and myself in particular have focused a lot on. So both from a planning perspective, as most able-bodied New Yorkers have left New York in the past couple of years, so helping a lot of people move. But a huge part of my practice is defending taxpayers who are getting audited mostly by New York, but California, Connecticut, other states as well. But New York is the industry leader here, particularly in the residency space. So we handled thousands of cases of individuals who left New York, and New York didn't think they left. So defending taxpayers in those audits is a big part of our practice, and litigating cases. We've litigated some of the bigger residency cases in New York over the years. So lots of fun stuff.
Yeah, lots of fun. Yeah, fun.
Yes.
That's what we like to say, state local tax, right?
Sometimes it's actually fun, but
yeah, no, I hear it. I hear you. Like, again, I've been doing this a long time too. So, we do have some things that some things are more fun than others, but again, we've been doing this a long time, both of us. So, it keeps us busy and can be challenging too. It's like big puzzle pieces to be put together. But so one of the things I just wanted to let the viewers know, like when we did this presentation, to our private equity stakeholder groups, a few weeks ago, it seemed that some of the things that came up in our presentation, not to mention, and I'll let Tim talk about this stuff, from his perspective in a little bit, but, just so that private equity firms know, if they're targeting certain companies, what kind of things might they need to look at from a tax perspective, from a state tax perspective, and some of the things we talked about was just nexus, right? Just where are those, target companies operating, and do they even know where they're operating? And I think both of our practices, we help companies with that. That's kind of like a, step one, right? Where do those targets have even filing obligations? And then, if they are flow through entities, right, then the shareholders or, owners have obligations as well. And so I think those were some of the things that we, talked about in our presentation, as well as then just, what happens when you do in a private equity firm or in another, acquisitive kind of firm may acquire a company, what do you do from a sourcing perspective for the gain on the sale, those kind of things, or, so those are all kind of high, those are high points for companies that are looking to acquire. But I guess from your perspective, what are you seeing with some of your clients in that space?
Yeah, I mean, the state tax issues in private equity deals is sort of an underrated issue. Obviously, you and I think it's the most important issue because that's what we do every day. But right. We've gotten called in on both sides of these deals where someone's getting acquired, and oops, they haven't collected sales taxes in the past forever years. So the private equity company that's buying them doesn't like that, right? We got to clean that up and figure out, have you been, are your sales taxable in this many states? And how do we clean that up through voluntary disclosure? So these state tax issues definitely can sort of rear their ugly head and not necessarily screw up these deals. I think the deals will happen regardless, but from the buyer's perspective, it's certainly something on due diligence where, they're looking at that, it's not 40, 50% federal tax, but, 5, 6, 8, 10% taxes on, $1 billion deals is still a big number. So, so the buyers, counsel and accountants are digging into state tax issues on the due diligence side. And then when we've been, again, representing the sellers, we're just, kind of playing defense sometimes, but you end up getting into debates with, the buyer's counsel about whether something is taxable. Like the buyer's counsel sometimes takes on the role of the government to say, oh, you should have been paying tax in all these different states. So again, not anything that really screws up a deal, but just there's an expertise there for the salt folks out there where they definitely have, become needed in a lot of these big deals.
Yeah, no, agree. Yeah, because we also, at our firm, we also represent from an accountant perspective, buyers or sellers and sellers. And we see some of the same things. And I think, go through and try to protect, the buyers and, so that they are not stuck, hanging holding the bag for some exposure that they, are acquiring. But to your point, I don't think that it's always maybe top of mind. Particularly when it comes to like transaction taxes, maybe maybe they focus on the income taxes, right? Because those are maybe a little bit more prevalent or out there. Because, there could be third parties, other CPAs or whatever that are working on, the income tax filings, but a lot of sales tax and transaction taxes are handled internally. So those may not be things that are always, at least, where a buyer or seller has, that much, or a buyer rather would have that much visibility to it.
Yeah.
So
look, with the Wayfair case in 2018, you mentioned Nexus, like now you have all these sellers who, might not be watching what happens at the Supreme Court level and don't realize that pretty much every state has come out and said, well, if you have certain amount of sales in the state, which isn't very high a threshold, you should be collecting sales tax in 46 different states and thousands of local taxing jurisdictions. So that can be messy, particularly again, prior to the Wayfair case. Oh, we only have Nexus in one state or something like that, which was probably bogus too. Like it's not, doesn't take a lot to create Nexus. So lots of these companies on a multi-state basis probably had Nexus all over the place anyway. The Wayfair case just sort of made it obvious that, now we have Nexus like everywhere. And that's got to get cleaned up in these deals, if the deals are going to go forward.
Sure. Well, and then, so that's, and so that's kind of like on the business side of it, right? The entity side of things. So then I guess kind of circling back to your practice, I guess, what are you saying if you're helping maybe some of those shareholders or individual owners, I guess, what are, other than maybe residency, kind of what are some of the things that you're seeing in your practice that they should be aware of?
It actually does. A lot of these questions will start with kind of the residency question. And it's, it's fun stuff for us because it's on both sides. Like, well, I have lots of clients who are selling their businesses and, they want to, maximize their take from the business, and state taxes is a piece of that. And then of course there's the folks who run these private equity companies who, I don't know if you've noticed, they make pretty good money too, right? So, the individual state income tax on the players in these companies is a big deal. So, but yeah, if someone's selling their company, I get calls a lot, which is, we're, got a letter of intent, we're going to sell. I live in New York City. My accountant just told me there's a 14% tax on my $100 million deal. That's $14 million. I don't want to pay that. We spent all this time in Florida already. Like, I don't want to pay the tax. So, helping the sellers in that instance, just get out of town, like move, get themselves set up so that they're not a resident of New York or wherever, of California, when that deal hits. Like that's massive. So planning for those moves, has always been a large part of our practice. It's tougher when there's a transaction closing in 3 months and someone calls me and
Right.
says, it just happened the other day. I'm selling my company for $40 million. Transaction is going to close in Q1 2023. Okay, well, where are you right now? In my big New York City apartment. Like, do you have
Right,
anything in Florida?
right.
No, I don't. Like,
All
okay,
right,
let's get
yeah,
to work, right? So,
yep,
but yeah, so that's sort of on the seller side, there's those issues. And then just like, well, how are states going to tax the gain on the sale, right?
Yep.
If the seller sells stock, then theoretically they only owe tax in their state of residence. What I've seen, and I don't know if this is just the deals I see, I don't really see a lot of just straight up stock sales, right?
Yep.
Like most people will sell assets
Yep.
or they'll sell stock, but the buyer will want a 330H10 election, so it gets treated as a sale of
Correct.
assets. So it's really sale of assets.
Yep,
Well, then, that seller might have, they could set up shop in Florida just fine, but they could have gain could be allocated to all these different states. So, and
correct.
again, that actually sometimes becomes a negotiated point on the buyer side. I'm sorry, on the seller side in these deals. Like, wait a minute. I'm in Florida. If I sell stock, I don't pay any tax. You wanted me to sell assets. Well, now I got to pay tax in 46 states. What gives? So that becomes a negotiating point. Pay me more for my company because you're screwing me over. I got to pay all the state tax.